Hello, my name is Tejas Kamath. I'm from NIT Trichy. I'm here to present my solution on Treasury 360 Financial Risk and Liquidity Management. As a whole, ABC faces persistent FX volatility and liquidity pressures in Nigeria driven by inflation and regulatory limits. Our goal was to design a comprehensive treasury framework combining hedging, AI-based forecasting, and blockchain-enabled system. High inflation and limited hedging instruments heighten exposure to currency swings. Nigeria's heavy dependence on oil export links the naira directly to global oil price movements. Structured strategies required to stabilize margin and improve predictability. Externally, offshore NDFs protect against naira depreciation, allowing ABS to lock in more stable FX outcome. Internally, natural hedging and aligns payables and receivables in the same currency. ABC's Nigerian balance sheet faces translational risk when converting local assets to group currency. We recommend matching assets and liabilities in the same currency and financing debt locally to reduce net exposure. Applying the current rate method ensures FX translation difference stays within reserves. To manage trade-related currency risk, ABC can deploy currency risk sharing agreements with partners, forward contracts, and money market hedges. These tools help protect export margins and limit exposure during volatile period. A structured risk mapping matrix links each hedging tool to its associated KPI, such as hedge ratio, mark-to-market movement, and variance from base rate. To forecast exchange rates, we developed a multiple regression model using inflation, interest rate, and GDP growth as key drivers. This model achieved 96% accuracy, enabling data-driven decision on currency exposure. Integrating LSTM and generative AI models improved predictive accuracy and adaptability. AI automation now accelerates training, reduces manual tuning, and provides real-time currency risk insight for proactive decision making. Cash flow forecasting strategy for ABs is defined by four pillars: system-based forecasting by integrating ERP, centralized cash movement using surplus to cover deficit across subsidiaries, scenario planning and continuous refinement via centralized forecasting dashboard for reliable, transparent, short-term forecasts. Through inter-subsidiary cash holding, ABC redistributes surplus funds to entities facing deficits. This reduces borrowing cost, improves ROI, and provides a unified view of viewing liquidity across the organization. Operational improvements such as just-in-time inventory, automated receivables, and digital payables help shorten the cash conversion cycle. R3 Corda-based treasury management system digitalizes inter-subsidiary settlements and cash visibility. This blockchain ledger enhances compliance and governance. We established a surplus cash investment policy aligned with RBI and SEBI norms. It defines permissible instruments, maturity limits, and credit rating thresholds to create a disciplined investment structure. Clear exposure limits, diversification rules, and regulatory alignments ensure every investment meets ABC's risk appetite. Continuous monitoring and rebalancing maintain compliance and portfolio stability even in changing markets. A blockchain-based portfolio optimizer tokenizes investments, automates rebalancing, and tracks real-time exposure. It delivers full transparency, audit readiness, and improved agility for treasury executives. In summary, our integrated approach combines hedging, AI, and blockchain to transform treasury operations, delivering resilience, transparency, and smarter liquidity management for ABC.